Hello, 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 everyone. Happy non-farm payroll Friday. How is everyone doing today? Good morning, Sterling. Sterling with the news in incredibly strong job numbers today. Incredibly strong. We'll go through those in a second. Yeah, gold is falling. So yen, really big move up in the yen. Dollar also rallying. Good morning, Patrick. Good morning, Patrick. How are you doing? Good morning, Jacob. Good morning, MJ. Has anyone started to talk about extending the Fed's bank repo window program bailouts for Bank Beyond March? As far as I know, it's still going to go away, but we shall see. Good morning, Heinrich. What is that? Good morning. Can we get a look at it? TLT, 30-year. Sure. Good morning, options 22. Again, remind me as I keep going, because after I get through, remind me. If you put it in the beginning, I can forget because I get so focused on the analysis that I can forget about a question earlier. Send me an email, support at Pat Trading Partners, Heinrich. Okay. RTX. So just remind me. Good morning, Eric. It's the non-farm. Maybe this should be the standard non-farm payroll hot Friday headwear. So, hello, Charles. Nice job on Ninja. You could have been a teacher. Well, thank you. Here, we'll go. Get back to the normal. The normal. The normal mic. My head was actually getting hot. Thank you for that comment. Thank you for watching it, Kalani. Thank you for tuning in. And I appreciate everyone who is here and taking time out every morning to spend it with me. All right, couple things. Non-farm payroll is very, very strong. Forecast 175 to 180, actual 353, so double forecast. Unemployment rate, it was expected to tick up to 3.8, coming in at 3.7. This is what you got to focus on. Average hourly earnings month over month came in 0.6, double forecast. Why I also bring that up is the ISM prices paid number that came out yesterday was very, very strong. So prices paid and wages still strong, which can lead to at least an inflationary floor. So do keep that in mind moving forward, that inflation could stall out, or the deflationary, or I should say disinflation component could stall out, and we could see, and I'm expecting a second bounce in inflation over the next couple months. But again, might not happen. I'm just keeping a very close eye on it because the markets would not be happy then. Average hourly earnings year over year expected to be 4 to 4.1, coming in at 4.5. Participation rate holding steady roughly. The only partially negative things was average weekly hours worked dropped. Government payrolls, I mean, not as strong as previous, but government payrolls, I think we talked about this on, I don't know, Jim brought this up, and I've seen this too. I mean, government payrolls expanding and private payrolls contracting is more recessionary, but longer term recessionary. Non-farm payrolls, big numbers. U6 unemployment coming in slightly better. What else do we have today? We have factory orders. Then we have consumer sentiment final numbers, 5-year inflation expectations. Keep an eye on that. Current conditions and just these short-term inflation expectations. See if that drops from 3.1. Then you got rig counts for the crude traders. So that's where we sit. Let's see. Good morning, Legion Reaver. Do you have broken down lessons on your page about trading from the beginning to more advanced stuff? No, it's a mess right now. You know what? I really need to redo everything. I'm really grateful for Legion Reaver putting together summaries of everything. I got to finish going through them. Maybe that's good. The goal after I move to work with people here, and let's get out some consolidated course content from beginning to advanced, maybe for everybody, and then I'll retire. So we'll see if we can do that. I'm going to have to get moving out of the way. again, my wife actually leaves for Arizona on Sunday, gone for a week, looking for a rental that will take 4 dogs. It's a little challenging. Then the house goes on the market, and then it will probably go quickly from the feedback I've gotten from my agent. So there's at where this house sits, there's very little inventory on the market, even at a high price point. So we shall see about that. Now, it's enough about me. The reason I bring that up is I probably can't generate a lot of new content in the short term because I'll be packing stuff, and I got to move my office to a different area of the house for better showing the house. So it's going to be a tumultuous little short time, but we'll keep the live streams going. I mean, there might be a day I can't do it. When I'm traveling cross country, there will not be any live streams. I'll tell you right now. Good morning, Anissa. Yeah, the wage price spiral. There you go. The wages also reinforce prices. Pricing going up reinforces the need for wages to go up, and then you don't get inflation continuing to drop. So, tell Bobby I'm moving to Naples. Well, congratulations, Richard. Naples is a nice area. No, money making what is this? No. Money making Mike can't retire. Oh, we'll see. I think I'm going to switch more stuff over. I'm so fed up with YouTube. I'm going to switch more over to Rumble anyways. Again, not a political statement. I'm just tired of all the games that are being played. Literally 3 months and not one single subscriber. And we were getting 200 to 500 a month before. And then all of a sudden, nothing. And I'm not doing that because it's going to make a bunch more. I'm trying to get this out there to people. All right. So we had Meta and Meta. I mean, I didn't think Meta's numbers were worth a 16% increase in market cap, but obviously people buying it do. So that's up huge. Amazon, very strong numbers, especially in the webs. The AWS, Amazon Web Services, up 6%. Apple, guidance was disappointing, down 3%. So we're starting to get, between Google, Apple, it's getting to maybe just the big three: Microsoft, Amazon, Meta, because we can rule Tesla out too. So maybe we're, and it could be still Nvidia. Maybe it's going to be the Fabulous Four only, the Fabulous Four going forward. But Meta and Amazon definitely, and Microsoft still holding up after their earnings, still driving things forward. You can see groups, comm services, and consumer cyclical leading the day. Everything else negative. Fed watch. The March is now at 80% for another pause after today's payrolls. And then we still have 1, 2, 3, 4, 5 cuts. So pause and 5 cuts. I still think this market's going nuts with 5 cuts. We get down to maybe 3 cuts, but if inflation pops back up, I don't know how much they'll be able to. Let's say we start getting inflation numbers above 4%, year over year. They can't cut that much. Fear and greed. We had the sell-off from J-Pow. We had the bounce back. So we'll have to see where this opens today, but already still in the middle of greed mode. We had Exxon and Chevron today. Those were the big ones today. We also have the big pullback in crude. Had enough of Maryland, Baltimore County. I understand that. I lived there for a while. So no more live. Who said no more live streams? I'll be here. I just said when I am traveling across country in the minivan with 4 dogs, I'm not going to try to do a live stream in the morning. I gotta get on the road. So that's all. You'll know. I'll know when they'll go down. But just because I can't be traveling and live streaming, it's just too much. I can't try to set up a laptop. I won't be looking at the markets religiously. I'll be glancing at the markets just to recap myself, but I won't be. There will not be any kind of market action for me put on in the short term while I'm traveling. Just managing anything long term. So, Keep an eye on this. We've now double topped. Again, this might not ever trigger, but this is what. Also, we're at the end of a major potential wave 5 area count. Okay? We're at the end of a potential wave 5 area count, but we really need to roll over. What's interesting is the confirmation would be a close below the close of Wednesday, but we also have a double that's now formed. So if a close below the low, now that doesn't, again, it could bounce back up. That's just a short-term top, but this could turn into something more substantial because we're end of a wave 5. So please keep that in mind. Again, you trade with the trend. It's what I've said. You trade with the trend. But we can have short-term and medium-term tops. I mean, really, you can start watching out if we get below 4,700. It's going to shift into more of a medium-term downtrend. Until that happens, this might be a blip on the screen, and then next week it just keeps plowing higher. You can see here, barely a close below the rotation zone back at the beginning of January, but then no close below the rotation zone since then. Dips into it, but every dip, including the one on Wednesday, have been bought. Short-term trading right back at the key level. The open on Wednesday, nearly the close on Thursday, which if you do candlestick math, that would be a big doji. All right. And we're trading that area again right now. So if you can see here, if it continues lower, my next area is 49.20. And then I'm back to about 48.93 to 4900. On any rally into the open, 49.50 to 49.53. And then if we do go to make new highs today, 49.71. But again, remember, this key low, 48.66, I definitely would keep an eye on that, especially going into next week. That would also be below the daily rotation zone. Those targets, in case you can't tune in, 48.20, 47.98, so roughly 4,800, and 47.74, and that could also take us back to the 50-day, which we have not touched again since we revisited in November. The breakout in the beginning of November, the retest, and then we've not retested it since then. The NASDAQ, is this a double top? Again, the really quick rule for people trying to learn this, go to the weekly. Let me zoom in. Let me take this off real quick. Does that look like a double top with any rotation in there? No. So you can go back to the daily and say, since it's not on the higher time frame, this was a little mini double that stalled out just beyond the first target and then bounced up, but it's not a bigger pattern, so you cannot use those levels. So if it closes below 17,221.50, you're looking back. My key target would be 16,881. You see a support shelf there, and that's also the 62.5 harmonic. You close below there. My next minor target, 16,700. Next key target, 16,516. That's how personally I would structure that to the downside if it closes below Wednesday's lows. To the upside, we first back to the short-term downside today. If we had going lower, it would be for the gap fill to yesterday. So 17,436 would be my key target today, and that's some pretty major support. Below that, about 17,365 would be the next level, and then you're looking about 17,300. To the upside, 17,580. And then there's a pretty big resistance shelf right about 17,625. So there you go. Sounds good. Hope you're correct. No, it's not. I actually traded in the EV for a PHEV minivan. So I can plug in, but with gas, I got 500 miles of range. All the seats folded down, can fit easily 4 dogs and luggage. So there we go. There we go. Let's see. Thanks for the insight into getting out of the SMCI call spread yesterday. Used the 5-minute rotation zone to get out at 11 a.m. Take a look at it again this morning. It's insane. Okay, I will have to do that. Glad something I said can help. Yeah, we'll go. We'll look at the Amazon upside targets. Sorry, I'm getting behind. We might have to go into the open, so stick with me. Hello, Christoph. Okay, so those are the key levels there. The Dow, we do have this little thing I'll keep an eye on. Not necessarily for today, but next week. It's a pausing area, but the first target is just below the support level, so I'd actually make a slight modification about 38,000 for the first target. If that would be a 4-hour close, about 38,212. In the short term, this is exactly where I'd use. If the sell-off continues, I'd be watching 38,394. Just bounced off the 50% harmonic from this little last push higher yesterday. So I'd use the intraday harmonics. The push up would be major resistance around 38,650. All right. So that's the key stuff to watch there. Still against the rotation zone. And you can see the 4-hour, you can still see the rotation here. That's why it's still valid. Russell, minor pop. Very weak pop yesterday, and already we're approaching back to J. Powell lows. If this takes out, I'm still expecting this to reconnect down with 1923 to 1925. Really watch yesterday's low bounce was off the 50. If it loses the 50 on a closing basis, for all those Russell traders, watch out. Because the next key target, sorry, I clicked on the wrong thing, is reconnection with the 200. And that's a harmonic level and the support level from early December. So that's what I'm watching for the breakdown there. VIX, still not much. Little elevated today, but still caught in the range. Now, this is stair-stepping higher. If something happens and this gets a VIX breakout, as I talked about yesterday, you could see some real stuff rolling over the markets quickly. So I'm starting to watch how this is stair-stepping higher, putting a little more pressure on the vol sellers. The DAX, gapping up. Little potential mini double top. So for all you DAX players, watch for a close below 16,878. Now, interesting enough, that still keeps it in the consolidation, but that could reconnect it with the 50. So that's a potential pullback area for the DAX. The big reversal, look at this reversal. Look at this reversal also. Now this is a lopsided double, but keep an eye if the notes, the futures close below the 110.26.5. A close below 110.26.5 on a daily basis. It could run. It won't happen today, but that's what I'll be watching over the next little bit. On the yield, you're in double bottom territory. Again, nowhere near happening today. This could turn around and come back down and turn this into a triple bottom. But the key thing would be a close below 4.196, so 4.2 roughly. So that's what I'm keeping an eye on. And if this does close, it's easier to see on the yield. If this does close above yesterday's high, it's a %B buy for a short-term continued bounce. That does not mean it would have to trigger the double. So keep an eye on yesterday's yield high with today's close. Yesterday's yield high was 3.935. 10-2s. Triggering yesterday, the mini double top, falling through today. Minus 0.33, minus 0.37.5, minus 0.41.8, which still keeps it overall in the bigger consolidation pattern. What's interesting, though, is this could be a potential bigger double top. That would get real interesting. Dollar index, yesterday's sell-off with the stronger market and today's rebound. I'm really watching where this is going to close. A close above 103.20 is still pretty key. If it drops back down and closes below 103.20, still in consolidation. Crude dropping yesterday below the rotation zone, below 2 levels of support. Next target, 62.5. roughly 72. We have a rising trend line there and the 62.5. So there's nothing bullish going on. We're getting now back to daily cycle bottoms, but this is going to be key to watch for next week for any bullish plays. Gold, big reversal yesterday. Now this isn't, remember, here's your back adjusted. There's a gap here because of the roll, but you can still get gap fills based off roll contracts. So I'm watching if it continues to break down next week, 2020, what's the technical? 2025. What else do we sit at? Let me just, yen. This, if it closes above yesterday's high, rotation zone and a percent B buy. So keep an eye on that. Remember, we also pulled back after closing above the 62.5, hitting the 75. Nice little pullback. So could the yen be targeting this 150 area again? We'll have to see. Running into some key resistance, but this could be a percent B buy. Euro dropping back down. So really watch where this closes in relation to 108.20. That's the key number on the euro. The spiders, again, still a slight gap up, 489.29, 489.20. The key support level I'm looking at is about 485.55. And then below that, if it did continue, the next key area is about 486.11. To the upside, you still have a gap left behind. I'd be looking first at the open price, 490.56, and then the close price, 490.89. Okay, and if this breaks to new highs next week, there's also now a major cluster at 494.30 area. The Qs, then we'll get to some other stuff. The Qs, gap up this morning, 423.73. So the gap fill would be to 421.88, which is coming into a pretty key 421.35 to 421.50. Right after that is major support. 424.95 is a key target to the upside if it rebounds into the open, and then 426.60. Bitcoin, not much right here. This could be a little mini invert. I don't know. It's going to be iffy with the targets, but it could be a return to 4,700 if it can get some momentum on. Other than that, not strong. Tesla, it's going to look like it's going to gap down into potential double bottom territory. That would be the only short-term bullish thing against the rotation zone. Other than that, it's still looking for a continued breakdown. Please type in the what else do we have? What else? So yeah, you have to already be in that. TLT, I know we wanted this. I missed one yesterday, and I'm sorry about that. The TLT, gap. I just want to see if that hit double topped. I did not look at this earlier. 98.67, 98.67 to the penny to the 75. So that's technically just fell into double territory, but to a penny. You gotta love harmonics. I'm sorry, you gotta love them. I love them. Look at that. And once you learn how to use them, and I've only taught part of it so far. Once you learn how to use them, but let's just see on the way back down. Let's just see one thing if we have any. Really pay attention to 95.01, and then especially on a closing basis, 94.50 area. Keep an eye on those two key areas if this is going to continue to roll over. So that's the key things. Now, if this is just a short-term blip and continues higher next week, let's just say it continues higher, that 98.67 and then 99.60, then 153. Those are the, now keep in mind, we are in overbought territory and we have cycle tops on the daily, but cycle bottoms on the weekly. And you can see here the really nice double on the weekly. So that's an interesting one to watch. What else did I miss? What else did I miss? RTX. Thank you, Royal Palms. See, this is why, instead of scrolling back through the chat, RTX. Again, you closed yesterday above the 62.5, so you could still have some magnet price to the upside. I want to see. I mean, your major support is, I would not even worry on even a pullback to 87 area. Because you look at, you have your prior resistance here. You based down there. You broke out. So any pullback, and that would be the bigger pullback. The minor pullback area I'd be watching is really around this 89.50 to 90. Okay? And then on the short term, the key level is about 88. But really pay attention, because you also have, look at all the support stuff you have below here. You have the rotation zone, you have the 200. All right, you have the weekly rotation zone rising, so I'd be really focused. It's still a valid breakout play to the higher price action. Amazon, slower into the open. Amazon. Now remember, longer term, talked about this before, closed above the 62.5. It's now through to 75 in that cluster area. The next target is 175. Next key target is 175 for Amazon. And then you're looking at major resistance around 183.75 to 184. Okay? So those are your next key targets. On any pullback, the thing, you still have a gap, but I would not be focused on the gap, because the key support would be about 162 or on there. All right, we got TLT, we got RTX, we got Amazon and SMC. I like how you snuck in your SMCI viewers wanted, huh, Sterling? The super microcomputer. That is what a wow. I mean, I don't have much to say on that. I mean, without looking at the shorter term, it's just going to keep going. I mean, the key support is 550 roughly, the first level of key support. You know, and it's just getting very overextended. So would I be chasing it here higher? No. But that's where the first key support would be. That's where we sit right now. All right. Hope everyone has a wonderful Friday. Let's just take a look at the S&P going into the open. I know we're already open. S&P, ooh. Let's see in the next few minutes if it gets that close above the high of 49.34 or not, or if this rolls down and turns into a triple. It's trying to put in a support base here going into the open, but that's it'd be a stronger on a little more of a pullback to this 40 if it does something around this 48.19 to 49.20. Looney Tunes. I love me some Looney Tunes. So, all right, with that, I shall talk to everyone next week. Thank you for tuning in. Hope everyone has a wonderful trading day. Bye for now.